So hello everyone, welcome once again. It is a pleasure having you all here with us today. Thank you for making time to join us for this training on digital transformation for financial institutions. My name is Doreen Zhao. I'm in charge of knowledge management for MSc Africa, and I'm going to be your moderator for this training today. I'm sure most of you will agree with me that we are living in very unprecedented times since the onset of the COVID-19 pandemic. The tragedy of the COVID-19 pandemic is such that it will have long-lasting implications on the global economy, and thus many financial institutions need to accelerate digital innovation and transformation so that they can remain sustainable. Such a transformation will be both a response to this crisis, which may well persist for years to come if no fully effective vaccine is found, and a response to an increasingly uncertain future. This training, I think, could not have come at a better time. Now, for the next 3 hours, our expert faculty, Olivia Obiero. Olivia, unmute yourself.
Thank you, Doreen. Hello, how are you?
We are all well. And Anant Tiwari.
Yeah, hi Olivia.
Hello, Anant.
Hello everyone. Hi Olivia, hi Doreen. Thanks
Hello.
for the welcome.
Welcome. So for the next 3 hours, our two expert faculty will take us through these three key elements of the digital transformation journey. First, they will talk through the digital transformation, importance, and relevance amid COVID-19. Secondly, strategic choices and options for digital transformation. And finally, implementation of digital transformation. At this point, allow me to mention that this training is just a condensed version of the course, as the full course covers a much larger scope. Some of the key aspects that we cover in the full course are, for example, process reengineering for digital transformation, delivery channel and distribution design, risk management for digital transformation, etc. We are now offering this course via online platforms, so please get in touch with us for any other information on it or any of our other courses that we offer at the Helix Institute of Digital Finance, which is a training arm of MSc. Now, before I hand over to the facilitators, allow me just 2 minutes to talk about some few housekeeping issues. We have sectioned this training in 3 parts. So after each session, we'll have a small slot of about 10 to 15 minutes for Q&A. Please use your chat function box to reach to us for any comments, questions, or any issues you're facing. Just type for us in the chat box. And then we prepare 2 to 3 polling questions, which will keep rolling as the session goes on. Kindly just take 2 to 3 minutes to give us some feedback. And we've also planned a break. We know the session is long, about 3 hours. So halfway in, we've planned a 10-15-minute break so that you can use the bathroom, grab your coffee, and then when we come back, we can do a small exercise to keep ourselves energized. Now, without any much further ado, allow me to invite our first facilitator, Olivia Obiero. Over to you, Olivia. Thank you.
Thank you, Doreen. Thank you so much, Doreen, for that welcome. And I would like to also extend my warm invitation to all the participants. As Doreen mentioned, we will be sharing a recording of this after the training. So I will be the first one to take you through the session this morning. So as Doreen mentioned, we're covering 3 major sessions. First of all, we're going to go into and understand, first of all, the importance of digital financial services and how it contributes to financial inclusion. Then we will delve into digital transformation and how financial institutions have to prepare themselves, especially in the wake of COVID-19. Once we complete the first session, we will have a Q&A session and then proceed on to the other sessions. So I will take you through the first few session slides relating to digital financial services. We will delve into understanding, first of all, when you talk about digital financial services, what do we exactly mean? And how does this contribute to financial inclusion? Then next, we will get into understanding digital transformation and the importance, especially currently with the COVID-19 pandemic. We see a lot of effort around measures such as social protection. And then we will also now discover how financial institutions can go forward as they implement digital transformation. Okay. So to start us off, I would like to give us first a brief overview and context on our environment and how financial access looks like. If you look at the screen, you will see the various continents, and you will see that currently we look like we are doing very well in some contexts. If you look at the developing economies, we see that financial access is very, very, very high. If you look at the countries in America, you'll see that 94% is what is currently, in terms of the percentage of adults who have an account with the financial institution. But if we look towards the low and emerging economies, particularly in Asia and Africa, we see that this trend is not the same. And we see that there's still a challenge in terms of access to financial services. When we talk about access to financial services, what do we mean? It's first of all defined that when you are talking about access to financial services, we're looking at the percentage of adults who own an account in a financial institution or a mobile money provider or a mobile wallet. So this is the definition. So when we look at the statistics that we have been presented on this slide, we see that the access trends are higher in other developing economies compared to the low and emerging economies. There are various reasons for this. We see that those developed economies have had a history of a very strong banking system and very strong regulatory regimes. But when we look at the developing economies, we see the contrast. We see that most of these countries are just developing their regulatory regimes. They are also, the financial service providers have also focused on more or less the corporate sectors, leaving the low and middle income clients out of the loop. So what happened is that from 2011, we saw that there was the introduction of mobile money, particularly in Kenya, where M-Pesa started, and this spread rapidly across East Africa. So very shortly, around 2015 to 2017, we saw a rapid emergence of mobile money deployments across sub-Saharan Africa, and also in Asia as well, where we saw that mobile money deployments were very, very high. Just from 2014 to 2017, we see 515 million adults were able to own an account through mobile money providers or financial institutions. So this shows just in a very short span, the fact that mobile money was introduced, were able to include very many adults. Notwithstanding, as much as mobile money has been the forerunner in terms of enhancing access to financial services, we see that there is an emergence of new technologies, for example, cloud computing, and we see also fintechs have come into this space. Therefore, they are including more individuals. So if we look at the continent of Asia, for example, let me give the example of China and India, we see that they have really, really captured a large base because of technology deployments in those areas. So we'll be getting much more deeper into this. Again, this is just to emphasize that right now, things are not the same as they were, like, let's say, a decade ago or maybe 20 years ago. We have seen a lot of rapid developments in terms of the internet penetration, mobile penetration. We also see that smartphones have also helped a lot because smartphone penetration right now is very, very high because of the emergence of cheaper phones. In terms of social media, we know very well that we kind of live in a social world right now. We cannot ignore the likes of WhatsApp because we see also a lot of innovation in that area. For example, we see, like, for example, in Kenya, we see very many groups of low-income users using WhatsApp, let's say women groups, to be able to run their group dynamics. So this is very encouraging, and this just has set the pace for what we are seeing right now in terms of the revolution around digital financial services. So as a financial service provider, you cannot ignore these numbers, you cannot ignore these statistics, because this is what is going to shape the future. I want to give the example of a client that we were working with, a microfinance provider. This microfinance provider has been in the business for over 20 years. They have been operating the traditional group lending methodology, whereby they serve their customers, whereby the loan officer will go and visit the customers on a weekly basis. What they realized is that over the last 2 to 3 years, they have not been making the same level of profits. In fact, the previous year, they were actually making a loss. And a closer look and analysis revealed that their clientele is actually aging. They were serving women above the age of 40. That was like at least above 70% of their portfolio, while they had not really made effort to tap into the younger segments. So they did a strategy revamp and decided to go and target younger women. And when they did this, they went with the traditional method whereby they tried to get on young people to on board, and they tried using the same way they have been doing business. But what they realized is that some of these young people are not into traditional methods. They prefer fast, convenient services. They want accessibility through various channels. They want, for example, to be able to go to Twitter. They want to be able to use WhatsApp when they're talking to their officers and all that. So this is just to show that we're operating in a very new environment, and financial institutions have to be very dynamic and embrace what the change that has come. So just to give us an overview, when we talk about digital financial services, what do we exactly mean? For a long time, before the evolution happened, we were mostly referring to the use of money transfer and remittances or payments of bills. But then I think this is a very narrow way of defining digital financial services. When we talk about digital financial services, we are referring to all formal financial products and services which are delivered through digital processes, digital enabled processes, and also offered to customers through digital channels. And technology is the foundation in which an institution will be able to offer these products and be able to also deliver these products in a digital manner. So just to show you what we're talking about is that as a financial service provider, going forward, we need to be able to deliver to our customers products which are either digital, or if you're not offering digital products, we need to factor in the fact that we need to do business whereby we are delivering efficiently, and this will be through automating our processes. And also remember, I mentioned that our customers would like to engage with us in a very dynamic way. So this means opening up our channels beyond just the brick and mortar way where we had physical branches, but then it also means that we need to talk about other ways to reach our customers. So right now, I know very many institutions have invested in branches and ATMs or even the terminal kiosks. But then right now, the way to serve customers is by offering an omni-channel approach, whereby your customer is able to access services through, let's say, a mobile phone app, USSD platform. And if, for example, they need assistance, then they can visit your branch for further support. So just to talk about further, we're still delving into understanding what digital financial services are. And remember, I mentioned from a previous slide that digital financial services is just basically offering what you have been offering in terms of the savings, the loans, the insurance products, but then you're delivering these products and services in a digital manner through digital delivery channels, and then through digital processes. So when we look at how digital financial services have evolved over time, remember I mentioned, first of all, we began through e-commerce. We started with the likes of internet banking and mobile banking. And when we started in the beginning, when we were adopting technology in our institutions, the emphasis was more on collecting information from our clients. Let's just give the example of an institution that is, for example, giving loans to MSMEs. So the emphasis of this institution was to focus on collecting information from these customers. So you want to first of all find out where do your customers live, how much in terms of assets do they own. When you look at their business, how are their cash flows? What are their financial statements talking about? So the emphasis traditionally was more or less using technology or the use of digital means to collect information. This has been changing over time, and we see now this move this moved actually to transaction-based, whereby institutions now stopped and said, okay, yes, we're using this information to assess our customers, but then we need to think about how do we get more value from the customers, and how also can our customers get value from us. So we moved from the era of collecting information using technology or digital means towards a point where we were now focusing on more or less looking at the transactions our customers were doing, because this was also showing us the behavior of our customers. And when we talk about why this shifted, is because we saw that our customers were engaging with us in very different ways. So remember, mobile money came, we saw that our customers were doing transactions on the mobile phone, they were doing transfers from the mobile phone to the banking system. So this now led to an emphasis on transactions rather than just collecting information. Shortly after that, we've seen now an explosion in terms of focusing on how we can use technology, or we can digitize the delivery of services to our customers. So right now, we're living now in a world where the complexity in offering financial services is becoming higher. So this means that as a financial institution, for you to survive, you need to move faster than maybe, let's say, 10 years ago. Things are really changing rapidly. Right now, what we're looking at is where we see financial institutions want to offer a client services ranging from savings up to insurance in a digital manner and using digital processes. So this just shows that the world is changing very rapidly, and we need to be cognizant of this fact and be prepared to take the next action points so that we're able to serve our customers in a meaningful way. So just to also reemphasize that, yes, the change has come, and financial institutions have to be aware of what is currently going on. But then we need to also recognize the fact that there are various aspects that institutions need to take care of when they are trying to adopt digital financial services. We are not living in a silo whereby, okay, today as the senior management of an institution, you decide, let us have or adopt digital financial services. You need to factor in various aspects. So one critical area I need to mention is policy and regulation. I remember I mentioned at the beginning is that as much as you might have your strategy to digitize and to adopt digital financial services, the policy and regulatory environment will affect how you do this. We've seen in various countries whereby some regulatory regimes are very rigid or conservative. They take their time before they allow institutions to actually deploy any digital financial services, for example, to deploy agency banking or to deploy mobile money services. We also see regulators taking different approaches. For example, let me give the example of Nigeria. Nigeria is a very heavy bank-led model, whereby the emphasis is more on banks rather than, let's say, Kenya, which is a market that is very heavily telco-led. If you look at Kenya, Safaricom, which is the leading telecom operator there, is the institution that was behind the M-Pesa innovation. So Kenya is a market which is very heavily telco-led, while Nigeria is a bank-led model. Though recently, the Central Bank of Nigeria passed a regulation whereby they tried to balance this, and they were enabling now what they call payment service banks to now actually drive financial inclusion. Though we see that as much as the regulation is progressive in terms of that, there are still inhibiting factors. For example, a payment service bank in Nigeria can offer savings and remittances products to customers. However, they cannot lend. And you know very well that in many markets, low and emerging markets, credit is a very big factor for customers to actually adopt and use your services. So another key enabler for financial inclusion is looking at the user perspective. So I'm going to touch on the two perspectives: user-centric design and marketing and distribution. So when you talk about the user, who are we referring to? This will differ in very many contexts. So traditionally, we know that very many financial institutions would focus on the corporate market, especially the commercial banks. They left the low-end customers to the microfinance institutions, to the cooperative unions. However, things changed when mobile money came into the picture, because everyone realized suddenly the numbers and the money is with the masses. So we saw a lot of innovations and a lot of scrambling to capture the low income base, because that's where in many low and emerging middle economies, majority of the people are in the low and middle income numbers. So when you're talking about an enabler for financial inclusion, we need to have products that are relevant for these users. So if you're a commercial bank and you're used to serving the corporate segment and you want to now capture lower and emerging middle income customers, then you need to change the types of products that you're offering. And beyond just offering products that can meet the needs of these users, you also need to be aware that you need to focus on and change your marketing and distribution, because what we see in many markets is that low income customers tend to take more time to adopt and actually use services, because they have lower levels of understanding or literacy issues, or perhaps they just need an extra nudge or push into using these services. So the first step is, first of all, to understand what are the needs of our users. And then from that point, we need to really engage on proactive marketing and distribution strategies to increase understanding of our customers. Lastly, one key enabler for digital financial services is technology. I mentioned that technology is evolving so rapidly. Today, you wake up and you see that ATM machines cannot take deposits. Tomorrow, you're talking about blockchain, you're talking about crypto assets. So technology is moving so fast. Going forward, as a financial institution, when you're thinking about digital financial services, you need to make sure that you have a robust technology platform that is able to enable you to deliver these products in a very efficient manner and in a cost-efficient manner. So for most institutions, when they think about taking up technology, it's a very costly affair, but at the same time, you cannot avoid taking up technology when you want to offer digital financial services for your customers. So at that point, I would like to introduce my colleague, Anant, who is going to take us into the next session on digital transformation and its importance, and the challenges that as an institution you might encounter. Thank you. Anant, please welcome.
Thanks a lot, Olivia. Thanks a lot. Yeah. Hello, everyone. And Olivia, I hope I'm audible. Doreen, I hope I'm audible.
Yes, Anant.
Yes,
you're audible.
you are. Yes, you are. Go ahead.
Hear you.
And can you guys see me as well?
Yes, we can see you.
Okay, great.
Okay, thank you.
Yeah. So good morning and good afternoon, ladies and gentlemen. I again welcome you to this session, and Olivia has given us a very good introduction as to what digital financial services mean and what the challenges have been and how we can probably define digital financial services going forward. But now let's start off with digital transformation, so to say. So when we say digital transformation, it is what just happened on your screens right now. So the screen that Olivia was sharing from Nairobi, the slide remained the same, but then the sharing started from New Delhi. So ensuring that these services are delivered seamlessly to customers in a way such that we can justify the costs, as well in the long run, we can ensure that the organization is able to reap benefits, is essentially what digital transformation is all about. If we are to define it in a more logical, in a more technical fashion, it is a process by which an organization can probably integrate digital technologies so that it can make services reach its customers in a win-win fashion, so to say. So if you could see this screen, let's start from the rightmost box. That's the vision with which we are moving, digitally enabled products and services, which makes sense to the customer. That's the most important part. Then they have to be delivered through a digital platform, if possible, if it makes sense. And for that, we have to gear the business processes. We have to ensure that the channels are in place. And we have to be very aware of engaging with the customers as strongly as we can, so that the transformation is not drastic, it is subtle, it is slow, and it is paced such that the customers feel that the journey is actually their own and not of the organization. Having said that, if we are to discuss some of the benefits, there are many. And if you could see, just skim through this slide, I would want you to just focus on the center of the circle, which says, when you add value for the customer, you add value for the financial institution. And if we are to convert these into the benefits that we are talking about, it would mean that we are essentially going to use digital transformation to reduce costs, to reduce our risks, credit risks specifically, increase customer loyalty, decrease the operating costs, increase efficiency, enhance the portfolio outreach, and whatnot. So we all understand that all these are the benefits that can be there if an organization is to transform digitally. Having said that, we also need to focus on some of the threats that can be there. So I specifically said threats because I do not want to focus a lot on the opportunities. Probably we all understand that there is a certain opportunity there, a definite opportunity there rather. But then let's also focus at some of the threats. So one of the threats is of the fintechs that have been coming in the market. And the other is, of course, that some operational risk can increase. There can be issues related to data privacy, frauds, then fraudulent data, and not just fraudulent, some junk data, inaccurate data that may get entered into the system. Now, one of the ways in which we probably can try to convert the threat of fintech into an opportunity is by actually partnering with them. So we have seen a lot of financial institutions actually partnering with fintechs as they go on. The good thing is that fintechs, since they work in very niche segments and in very niche areas, they focus on only probably one area of the whole value chain. So probably you would have a fintech that is working only on loan origination, or a fintech that is only working on cash management, or maybe a fintech that is working to resolve customer queries in very less time span. So there is a lot of thought that is currently going into partnering with these fintechs actually, and finding synergies with which both the financial institutions and the fintech can create a win-win kind of proposition. Having said that, other threats still remain, like other players and the risks that come with using digital means without doing proper background preparation and training for the same. So we need to be very aware of these things also as we talk of digital transformation. A case in point can be of an organization named RENACA in Benin. Benin is a very small country in Francophone Africa. And if we have people from Francophone, please pardon me for my pronunciation, because I'm sure there is a French way of saying RENACA as well. But the point that I want to bring home here is that this organization had just 33 branches. And before digitization, the banking hall witnessed long queues, and there were a lot of manual processes going around. There was no CBS. And once these things were introduced, just look at the numbers, 90% increase in commissions, 20% decrease. And then after 2 more points, you find a 34% increase in the number of customers. Now, since the organization only had about 33 branches, so to say, there are 2 key learnings that we have from this particular case study. One is that even if your organization is small, say maybe about 30, 40 branches also, then also there is a case to transform digitally. Many of us here work for organizations that are not very, very huge in size, so to say, not multi-billion corporations, so to say. But even then, to transform digitally, there is a case, there is a justification to the cost that can be given. RENACA brings that out very, very nicely. And secondly, since many of us work for the LMI segment, the lower and middle income segments, who in the very recent past have not had a lot of access to many of these services. If we are to transform digitally, then we can bring a lot of impact on the ground as well. A 90% increase in the commissions would have meant a huge increase in the customer base as well. It says 34%, but maybe the number was even higher. So what we need to understand is that even if the organization is small, there is a case to transform digitally. And secondly, the impact that can be brought on ground through transforming digitally can specifically be huge because we are dealing with segments that have not experienced a lot of these things in the past. Then there is the salt we need to have in the pinch while discussing digital transformation. Some of the issues and challenges which will come. So this slide specifically talks mostly about the external challenges that can be encountered, like the regulatory regime, the policy regime, the consumer data protection laws that might be in place, and the quality standards, the technologies available, then globalization of DFS. All these things will have to be taken care of, and they can be potential challenges while we are planning for digital transformation. So while there are benefits, there are certain threats, small ones, which can translate into bigger ones as well. And then there are challenges that we need to be very mindful of while planning for this transformation. Now, let's talk of the relevance of digital transformation during the COVID-19 pandemic. I do not think it can be overstressed anymore that digital transformation is the key to answering many of the problems that the COVID-19 pandemic has posed to the financial inclusion activities happening around the globe, simply because it has made movements difficult, simply because it has made branches shut down and agent shops close. So we all understand that the COVID-19 pandemic is causing problems. We have just tried to summarize them in say 5-6 points. So decrease in net banking income is definitely one. There has been an increase in credit risk for institutions. Operating expenses have gone up because people are not allowed to move as freely as they were in the past. Then there's obviously a liquidity crunch coming in. And we are even seeing that there is a decrease in the number of customers and portfolio qualities are going down. And of course, savings are seeing a downfall as well. So we all understand that the pandemic is having an impact and we need to sort this out quickly. The key probably to this, to at least solving some of these, can be digital transformation through offering some of the benefits as we see in this particular site. So starting from the left, probably digital transformation is how we can tackle competition, since it will take us ahead of the curve in terms of technology and how we reach out to the customers, also as in how we design products for the customers and improve their experience. Then by ensuring that there would be limited physical contact, we are again ensuring that we take care of the pandemic and its exigencies. It of course offers flexibility to clients, since they will be able to communicate and maybe have experience of some of our products through various channels like mobile phones, apps and phone, and using other channels. Then of course there are partnership opportunities, as we were discussing about the fintech thing earlier. Losses can be mitigated as risks can be minimized. And of course, all this, if goes well, would translate into an increase in the number of customers. So if these are the problems, then by ensuring that we transform in the right way, these can be the potential benefits that we can reap, an organization can reap. As we now close the first session, which was an introduction into what digital financial services are, what digital transformation is, and what benefits it can give to us in the pandemic and after the pandemic is over as well. I would like to invite Doreen to please take us through some of the inputs that we may have received in this session. And also if we could just try answering some of the questions that have come in. Over to you, Doreen.
Thank you very much, Anant and Olivia, for that very insightful session. Yes, a few questions have come through. from the audience, and I'll tackle one as we go. So Deadboot, thank you very much. You asked, the numbers and growth of digital usage is very encouraging, but will be good to know what is the growth and penetration in case of less affluent customers. So the question is, what will be the growth and penetration in case of less affluent customers? Olivia, you can take this one.
Okay. Thank you, Doreen. So the question is, in terms of growth and penetration for less affluent customers.
Yes.
So like I mentioned, we've seen that in the low and for the low and less affluent customers, we see that there is a lot of efforts in terms of bringing in people into the financial services, and we see a lot of effort in terms of people starting to actually open accounts and also starting to actually open the mobile wallets. However, the main issue is around usage. So we see very low usage in many contexts. For example, in Kenya's case, we see that many people are used to mobile transfers and they're used to mobile payments. However, when you look at the savings, it's still largely low, but we have seen a lot of development, especially around digital credit, where we see many low-end customers are actually borrowing digitally. For example, let me give the example of Safaricom's products. There's Mshwari and Fuliza. These are digital loans that are targeting low-end customers, and we see very significant rise in the numbers. So in many countries, we see that there's still a lot that can be done in terms of the growth and penetration, especially around usage. Access is not such an issue because we see a lot of innovations and people are able to open accounts and they are able to even do the basic transfers, cash in and cash out. But then when it comes to usage, it still remains an issue. So providers going forward should be thinking about what is the value proposition for my clients. What can I make, what can I give my customers that can enable them to stick onto my service? It just goes on at the same point where we talk about, do we understand our customers' needs? And then do we understand where they are, especially around literacy? Because you see, literacy is a big, big issue for the less affluent. That's my response for that.
Thank you for that, Olivia. There's another question that has come in from Stephen Grave. Stephen is asking the definition of financial inclusion as adults with a formal bank or account seems narrow. Do we know different financial services usage across adults, e.g. bank accounts, loans, savings, or insurance, etc.? Olivia, you can take that.
Okay. So let me just talk about, first of all, the challenges that we have when we talk about financial inclusion. Data is a very, very big challenge. In very many, especially countries which are in the low and emerging economies, it's very difficult to get data and statistics that can point beyond just owning or having an account. So the reason why many people or many institutions define financial inclusion as the ability to have an account is because we are able to get this data and we're able to get these statistics. But then when you talk about other statistics around maybe savings, usage, insurance, it gets more complicated and it gets more complex. Things are really changing as regulators are also changing their policies and they are also adopting other definitions. But then for right now, the basic definition that we go by globally is the fact that people will be able to have an account. Notwithstanding, we also see that the definition has been expanded, especially around digital financial services, and that's why we took you through the definition that having an account is just not enough. It's basically having the full scale of services, whereby a customer is able to open an account, save, borrow, take up an insurance, and even for some countries, we see pension providers are also deploying their products digitally. And also we see the government, we see a lot of government initiatives, for example, government transfers. We see a lot of tax collection that is being done digitally to avoid leakages. So it's, yes, the definition is narrow in terms of the fact that we're able to get this data now, but then a lot more is happening beyond just having access to an account. And that's why I was just trying to give you some examples beyond just the savings and products, but we're also looking beyond the full spectrum of services.
Thank you so much, Olivia. Samuel Apondi posed a question which went, the growth of access to financial services is worth applauding. However, I'm wondering whether there is any correlation or contradictions between growth to financial access or services and financial literacy, especially in the developing economies. Anup Singh, our head for Anglophone Africa MSc, sought to answer the question, but I'll invite him to just briefly speak on this again. Thank you, Anup.
Thank you so much, Doreen. So I think it's a great question. And what we are seeing is that if you look at the access numbers, somehow it is skewed towards urban area with male population, with young population, which essentially highlights the point that people who do not have financial and digital literacy and capacity, who have not the right level of technology savviness, the numeracy and the literacy that is required, they are not very comfortable interacting on the digital application. But we do know that digital is going to be the future, whether it is the application route or the SMS route or the USSD route. And hence there needs to be some focus on building the skill sets, and that can be done through a mix of multimedia. So we have been working with UNCDF in Tanzania with refugees, where we used a combination of tablet-based, SMS-based, and in-person trainings to enhance the literacy, and that actually led to significant increase in the access numbers and the usage of digital financial services. So it is not difficult. The problem is that it is not being done. Thanks.
Thank you so much, Anup, for that. One more question to Anant. Teresa Maru is asking, or rather making a comment, interesting that the profile of digital users are mostly young. So can we assume that credit is usually for consumption? How are the repayments? Over to you, Anant.
Okay, so that's first of all a very good observation that the profile is mostly of young people. So there are two things that we want to say here. One is that since the younger population is of the group that is more amicable to adoption of new technologies, so it is only expected that the trend would be in such a manner. But having said that, there is a lot of research that has been done that a lot of credit that is being availed by this younger population, specifically by women, is for entrepreneurial purposes, and a lot of it is actually not directed towards consumption. Also, what we are noticing is that as the digital footprint is expanding around the globe, and specifically during the COVID-19 period, and this is what we expect will be the trend in future also, there is a push from the customer to organizations to actually start offering digital services. So earlier it was that the organizations were pushing for it. Now the customers are actually pulling that you offer services in the digital mode because traveling is difficult for us and the bank branches are closed. So are the agent outlets. So with that pull now being from the customers, we expect that a lot of people who are not from the younger generation as well will now take to digital services, and the footprint of digital services in the older lot will also now start increasing along with the younger lot. So to put that in a nutshell, yes, it is true that a lot of credit has been used for consumption by the younger generation. However, a lot of it, specifically by females, is also for entrepreneurial purposes. And owing to the pandemic, we expect that a lot of the older population will also now start pulling financial services in the digital mode. A lot of it, which will ultimately go to fruitful entrepreneurial activities. Thank you.
Thank you so much, Anant, for that. I think those were the questions for our first session. So what we'll do now, we will move into the second session, which is going to be on digital transformation, focus and strategies. We'll hand over back to you, Olivia and Anant, Let me mention this session is slightly longer than the first one, so maybe halfway into it, we will take our 10 to 15-minute break for our coffee and our bathroom break. So over to you, Anant and Olivia. Thank you.
Yeah, thanks a lot. Thanks a lot, Doreen. And it's very encouraging that we have such insightful questions and queries coming up from the participants. We are also learning as we go along this session, frankly speaking. So, okay. So once we have had some understanding of what DFS and digital transformation is, and what the scene is looking like right now, let us start moving towards the issue of actually transforming digitally. As in, what if an organization wants to transform, or even has to consider that it wants to transform? From where should it actually start looking? So essentially, this journey starts with an overview. We'll try to take an overview of the elements, then we'll try to have a look at the processes, then we'll try to look at what the options that can be considered for an organization. So this is where it starts from. The three fundamental questions: why on earth do you need to transform, is the first thing that any organization needs to ask. What are the considerations for you to transform? Do you actually need to transform or not? The first thing is to answer this. If you need, then are the opportunities available to you? Would you be able to justify the cost that will go into it? Is there a business case for it? And if both the answer to both these questions is yes, there is, then what is the process that you would want to take? Because let's understand, we are talking about transformation. This is not just a change. This is not just the introduction of laptops or the introduction of maybe mobile phones in a few territories. This is about transformation. So we'll have to, any organization should be mindful of the fact that there's going to be a lot of metamorphosis that is going to come. And we have to, the first step has to be able to answer these three questions. And as we try to do that, let us try to take you into some more details of answering the first question: why do you need to transform? So probably when we try answering these questions, these six areas or themes can be looked into. Let's start clockwise from the right-hand corner: customer centricity. Would transforming digitally lead to more customer-centric products that will come out of the organization? Will it lead to an optimization of all the distribution and delivery channels? Will we be able to target the customer better? Will we be able to reach out to them better? Will it make sense for us to maybe go through a mobile phone to them? Is that in place? That is the omni-channel presence we're talking about. Then, can we look at more efficient processes through end-to-end digitization? Is that an option that we can consider? Fourth, can we engage with the customers better? As in, can we talk to them better? Can we hear across from them better? Can we resolve their queries better? Is there a case for that? Then, is the organization aligned for such a change? Is the risk management in place? Can we do improved risk management by transforming digitally? If we are to consider all these six areas, then probably we will probably be able to answer the first question, that is, do we really need to transform? Now, as I take you to the next slide, let me just request some finger movement from everybody. Let's just run a poll and see if we can try answering as to what objectives our organizations would have if it were to consider digital transformation. So I understand most of us work for some or the other organization, or have worked, or presently work in some consulting role. So let's just try to answer this poll, and let me see what the responses we get here. Just a moment, and you'll see the poll on your screen just now. I'll be giving you around 30 seconds after I read through the question, and let's just have your opinions quickly. Yeah, so what is the most important objective for your institution's digital transformation strategy? What is that one most pressing question that you feel would get solved if you were to transform digitally? And your time starts now. Yeah, so the time's up. Maybe I give 10 more seconds. And yeah. So this is how it looks like, ladies and gentlemen. Maximize efficiency and achieve cost reduction through digitization receives the maximum responses, followed by meeting the changing needs of the customers for a digital experience, followed then by increasing the market outreach, and of course, to manage the competitive landscape. So, as we can all see, it is efficiency that beats everything else. And why should it not be so? In the recent pandemic times, efficiency is probably the one that has been maximum hit. And efficiency is probably the answer to resolving cost issues and resolving revenue issues as well. So it only makes sense to consider efficiency as the most striking benefit that probably can come through digital transformation. So yes, most of us are on the right track, and let's see how we can try understanding what these objectives can be. So we have ourselves tried to list down some of the answers to the why transform question. So additional revenue and improving operational efficiencies is right there on top, which most of you were also saying. So it's pretty much very heartening to see that. Then of course, customer value is there, effectiveness of operations is there, competition is there, and tapping new opportunities is there. So we pretty much understand now as to what should we be looking at while even trying to analyze, do we need to transform? What are the areas we want to look at? So once we have some understanding of this question as to what is our organization's need, probably the next thing that we want to look at is what is going to be our vision and mission of digital transformation. So at this juncture, it is very important for us to understand, dear participants, that digital transformation is a lot more than just process automation. As I was saying earlier, digital transformation is a journey. It's a transformation journey. It's a metamorphosis. It will probably change certain basic things, basic ways of functioning of an organization. So it should not be considered as just a one-off activity of doing a process automation, or like as I was saying earlier, introducing mobile phones to maybe do customer origination or to gather data. It should not be looked at that from that perspective. Digital transformation is a journey that should be looked at from an immediate, short-term, medium-term, and long-term perspective. So maybe we could have small steps that in the intermediate, but then the aim should be of say 3 years, 5 years, 10 years down the line. That should be in our mind. And if we have to do that, then we'll have to have a framework in place, which we have tried to show at the bottom of the slide. We need to define the rationale. Why is this strategy being developed? And this is where we'll have to have that long-term vision and mission in mind. The second would be to have tangible outcomes that we need to list then and there with all the stakeholders involved as to what are the outcomes that we desire, what would be the activities that we would be doing, and finally, how would these be implemented? How will we bring those changes on the ground? We need to have all these 4 things in place as we start on this journey, and it should not be looked at from a rather myopic view of just process automation, is what we're trying to say here. As we move next, these are the considerations that we need to have when we start this journey of digital transformation. So once we are able to answer the question of why we need to transform, then we also need to consider whether these considerations are in place, whether the institution is committed. Do we have the resources available for that? Is there a maturity in the market? Do we have a supportive regulatory environment in place? Do we have partnerships available? And is the customer base large enough and with a promising revenue potential for us to go ahead on this journey? So even if you feel that digital transformation is probably the way to go, you also need to understand whether you have all these things in place, which are extremely important for any organization to take this journey. Because without these enablers, it would be very difficult for any organization to even start and proceed on this journey of digital transformation. So it's very important that we consider these and then only then move forward. Now, let's try to do another poll. And at this juncture, I would actually like to invite Olivia to take us through this and some of the case studies that we can all collectively learn from. Over to you, Olivia.
Thank you, Anant. So as Anant mentioned, we will run a short poll. Sorry, as Anant mentioned, we're going to run a short poll on trying to assess and see what are the strategic options for institutions as they're thinking about digital transformation. I would like to request if Anant may launch the poll, please. Anant? Hello? Anant,
Yes,
can
yes.
you kindly launch the poll? Thanks.
Yeah.
Okay. Okay, so using a question at this point, where does your institution stand in the journey of digital transformation? Currently, what is the focus when you're thinking about digital transformation? Are you thinking about automating your processes, or have you just started, or do you want to invest in new technologies, or do you want to ensure that all channels are integrated to ensure a digitized customer experience? So we're going to give you some more 20 seconds. Five more seconds. Okay, I think we can stop now. So if we look at the polling results, we can see that 20% are focused, 30% have just started their journey of digitization. 25% are focusing on improving and automating processes. 20% are looking at updating or investing in new technologies. 21% are integrating all channels to ensure a digitized customer experience, and 5% are fully digitized. Okay, this is a very interesting analysis because it shows that we are all in different areas. And as we mentioned before, digital transformation is a journey. And I can see from the responses, we are at various stages. So there are those who are just starting their journey, and there are those who have different areas where they're looking at. There are some who are looking at processes, while others are thinking about technologies, while others are talking about channels. And there are those who have fully digitized. So we're going to go into a session and talk about this in a deeper manner. Okay, so the reason we did the poll was to find out where we are in our different perspectives in our different institutions. And you see that most of us have either started this journey or are in the process of currently digitizing. And very few of us seem to have reached the apex where we are fully digital. But when you think about digital transformation, Anant has just touched on the importance of having a strategy when you're thinking about transforming. Those are the first steps in terms of laying the foundation. You need to have a strategy, and everyone needs to be on board. If everyone is not on board, it can lead to future problems. So once you've laid out the foundation, we have a strategy. The next steps are, what options do we have when we're thinking about digital transformation, there are 4 key areas where we need to look at when you're thinking about digital transformation strategically. The first is we need to transform our processes. Second is we need to transform our products. Third is transformation of delivery and distribution channels. And then the last is people. I think sometimes in this journey, we are so keen and we are so in such a hurry to implement everything, and we want to make sure we are ahead of the curve, but then many times we forget our people. And this is a very, very key aspect. We cannot digitize without our people. And when we talk about people, we're talking about our staff from the senior level up to the lower levels. So we're going to discuss this in detail, and we're going to share some case studies and showing examples of how some providers have done it. We're also going to look at lessons and see where maybe 1 or 2 things should have been done differently. But just to lay the groundwork, I will talk about, first of all, the options, and then we'll get into the case studies. So as I've mentioned, there are 3 key areas you should look at when you're thinking about transforming digitally: processes, products, delivery, and distribution channels. So most of the responses were falling around this. And I'll tackle one by one. So when we talk about processes, we see that many institutions still have manual processes from the front end to the back end. And this also affects our costs, because when you have manual processes, it means you're relying more on people, you're relying more on your processes are paper-based, so it means you take more time. For example, if you're delivering credit, you'll find the turnaround time will be higher because you have manual processes. So when most institutions think about digital transformation, the first steps they think about is how do we automate our processes? And many of them rush into doing this. However, we've seen from many institutions that we have been working with, sometimes people tend to maybe underestimate what they have to do when it comes to processes. Like, let me give the example of an institution we were supporting to do engineering, process engineering. So this institution thought of automating all their processes by bringing in a very novel idea, and they invested heavily in digital field applications. So they are a microfinance provider. They wanted to automate the processes, the onboarding processes when the credit officer goes to visit the client. So they wanted to make it very quick and seamless, because they realized that the turnaround time was heavily being affected, especially when the officer was onboarding this client. So the officer will take as long as 1 to 2 hours onboarding customers. So what they decided to do as an institution was to invest in digital field application tablets, whereby they brought in these tablets and the officers were trained on how to onboard the customers. But they forgot one key element. Once they deployed these DFA solutions, the officers went to the ground and they realized the turnaround time had not changed at all. So when we went in and supported them, we realized that the processes were the issue. They had not changed the back-end processes. So the front-end processes, it was taking a shorter time to onboard the group customers. However, at the back-end, things were still the same. So the officers would take in all the information, scan the documents, go back to the branches. There will be no way of transmitting the information from the front end to the back end. So we realized that the turnaround time was the same because there was no effort in terms of processes. So when you're thinking about transforming your processes, you need to be very cognizant of the fact that you need to transform from the front end to the back end, looking at the customer journey and also making sure all the workflows are taken care of. If you're able to do this effectively, you'll be able to see some gains. For example, you'll be able to drop some redundancies. And the other question is, will you be able to automate all the processes? This also depends on your system as well. Because also we realized for this institution, they had a technology platform that was a bit outdated. And when they looked at the processes and we helped them in revamping these processes, the other issue that they had was that the platform was not able to sustain or to automate the processes that they envisioned. So these things go hand in hand. When you think about transforming your processes, you also have to think about, do I have the requisite technology to also do this? And another issue we also saw in the case of this provider is that some of the staff were very resistant in terms of transforming processes because they felt that some of the back office functions will become redundant, and hence some people will lose their jobs. So that's just showing you some of the lessons that we see, especially around this area. Let's talk about products. We've seen a lot of innovations around products. We see now there are digital savings products. We see digital loans. We even talk about insurance and even pension and even government bonds. For us at Microsave, we always say that it's very critical. As much as you're talking about products, you need to understand your users. What are the end users? What's the value proposition you're offering? Let me give the example of a provider, a financial service provider we were working with in Sierra Leone. So they were very keen on bringing in a new product for their customers. They wanted to mobilize deposits by introducing a digital savings product. So it seemed like a very attractive proposition. However, when we did the market research and we went and talked to their customers, we realized that the customers were not ready to adopt digital savings and loans because the informal mechanisms they were using had more value to them. So let me give the example. So in this market in Sierra Leone, the low-income customers tend to prefer the informal savings mechanisms, whereby what they call osusu. So the osusu is a collector who goes around the market collecting savings from the members, and then when the members want their savings or when they want loans, they are given the loans. So when this institution wanted to deploy or tried to deploy the digital savings and loan products into that market, there was a bit of resistance because of some various issues. The first issue was that the customers were being charged to do transfers from when they went to deposit the money into the digital wallet, and also when they were withdrawing the money, they were also being charged. So that already brought in a lot of resistance, because when they were comparing this to their informal savings mechanisms, they were not incurring any charge. Similarly, another area we saw there was an issue was that accessibility was a problem, because the Osusu collector would actually go around the market collecting the savings from the members. While for this case, it required that the customers would go and look for an agent and then now do the deposit, or when they had to do the withdrawal, they would do the same. And yet in this country, agent points were not very, agency banking was just starting, and therefore getting an agent was difficult. At the same time, even these agents would also not be very welcoming to the customers. So we saw a lot of resistance in that. So we're just giving this case of a provider who wants to deploy digital savings and loan products without considering the context of these clients. So when you're thinking about digitizing your products, you need to think about what's the value proposition for your customers and what's their pain point. So at that point, that is very critical before you introduce such products. The third point I would like to talk about is what are your delivery and distribution channels? And I saw some of you also mention that you're really focusing on technology platform. When you think about the technology platform, many institutions would want to get the most robust platform, but then resources is a big issue. The same thing also with the delivery and distribution channels. One has to be very careful before deploying this, because it's very cost intensive. And at the same time, you might not be able to realize the gains so quickly as you might imagine. So let me give the example again, but this is now in Kenya's context. So here in Kenya, we have a very interesting situation whereby agency banking is a very key primary distribution channel that most banks have taken up. And this was riding on the success of the M-Pesa agent banking channels. But what we realized over time is that the activity levels of some agents are lower. So therefore, it also affects the distribution strategy of the provider. So assuming, let's say, you want to deploy your products through the agent channel, getting the agent to actually push your products or to provide that service was becoming a challenge for some banks, because they were not offering a suitable business case for their agents. So we saw that in our market, what happens in Kenya is that an agent can serve very many providers. So if I'm an agent to bank A, I can also be an agent to bank B. So we will see that some providers will suffer at the expense of others. The agents will try and push for this particular provider at the expense of the other. So again, when you're thinking about delivery and distribution channels, you need to think about what is going to work well for your customers, and then are you going to be able to sustain this in the market as well? Is it going to be a suitable business case for you? And many instances, we see that many providers also decide to partner at this point. So assuming you're a microfinance provider, you might decide to partner with a telco that has agents. So we see a lot of partnerships, which we'll talk about much later as well. So the last point is just talking about people. Remember, I mentioned people are very critical. You cannot digitize or transform without involving or building the capacity of your people. Particularly right now in the COVID-19 pandemic, we've seen many institutions having to train their people afresh because they had to deploy their digital options very faster than they had previously planned for. So I just want to take us now to the next part. I think I've touched a bit on this, where we're looking at the design of products and services. We're talking about designing products and services for our customers. So everyone is now thinking about how can I design for my customers? Remember, we are saying digital financial services is just beyond owning an account. It also looks at providing full scales of services, including savings, loans, insurance, pension, the full spectrum of services that a customer can actually adopt. But here at MSC, what we see also is that rather than focusing on just deploying products, we look at the use cases. What are the customers' needs? We look at use cases rather than products. When I say use cases, I mean, what is the natural journey of your customer? How does your customer actually use financial services, or how do they, maybe, can you say, what is the natural way of how they interact with their service provider? So when you talk about use cases, we look at how the customer gets money, how do they spend this money, what are their thoughts around protecting their finances? Do they maybe prefer to save in form of assets rather than saving in protecting their money through insurance? We look at their futuristic goals, and we also look at their immediate goals. So we talk about get, spending, and then protecting, and then also investing in the future. So one area about designing for digital products and services, the first part is to understand our customer needs. And typically, this is where market research is very important. We need to understand the context of our environment. How do we understand and capture these customer segments? Assuming you're a financial institution, who do you want to serve? Do you want to serve the corporate customers, or do you want to serve the low and emerging customers? So that's the first step in understanding your customers. Who do you want to serve? And this is typically done by segmenting the market and also segmenting your portfolio. Once you've understood who you want to serve, the next points are conduct the market research and then come in and design the solution based on the needs of your customers. And in designing the needs of the solutions, we look at 5 key areas, and this refers to convenience. Is your solution going to be available and accessible? Cost effective, is it competitive? Remember, I mentioned the example of that provider in Sierra Leone, whereby the customers were very price sensitive and they did not want to incur costs as they were using these products. Communication, we've talked a lot about financial literacy being an issue for low-income customers. How do you need to engage your customers to the point whereby they are able to understand and adopt and take up your services? Customer care and customer user interface are very critical areas. And we look at customer care as soon as your product goes into a digital form, this is an element that is normally critically ignored, because you assume that once I've digitized everything, then we lose the element of the physical touch. But then here, we have seen very many providers suffer in this context. When you stop combining physical touch or having a high touch model with a high-tech model, we see a lot of concerns around customer dissatisfaction, for example, or if maybe, let's say you're doing digital lending, we've seen many providers suffering in terms of bad quality loans because of that loss of physical touch between the customer and the provider. And then lastly, we look at the customer user interface. Is it friendly and easy to use? I saw someone making a comment saying that smartphones are not yet being used for low-income customers, which is the truth. We actually did a study, a market research study, which was showing that many low-end users, particularly women, struggle when they are using smartphone user interfaces. So there's a lot of education that is necessary to capture these segments. We are now moving on to continue and look at the strategic options and see how we can transform our products, our processes, and our delivery and distribution channels, while making sure that we are taking care of our people as well. So I think we began with the first, can I call it the first P, which is how do we design or how do we make sure that we have the right digital products and services for our customers. Just to maybe emphasize on what we had learned before the break is that we should look at the use cases rather than just products and services. How do our customers, what do they do in their daily lives? How do they get their income? How do they spend this income? How do they invest it? How do they protect it? How do they do the transfers? How do they make their payments? So that's what we should be looking at. When it's more of a natural flow, then we are able to meet them along their journey and we are able to design for them. So we can now move to the next part. So I would like to give a case study of a provider that we supported in Kenya, Housing Finance Bank. So Housing Finance Bank is a bank that has been in the market for very long, for I think over 20 years, and they were a mortgage financing bank, and they were serving the middle and corporate income segments. They were mostly focused on property development and mortgage finance. So over time, they realized that, their market share was dwindling and there was a lot of developments that were getting left out, especially now that Kenya is a market that has been a front runner, especially around digital financial services. So by the end of 2017, they decided to diversify their offerings and target the mass market. This, of course, was a very critical move, and they had to, first of all, do this at the strategic level, whereby at the board and the senior management level were involved in setting up the strategy on targeting the mass market. I think I just want to go back to what Anant had shared like a few minutes ago, where he was talking about strategy. What exactly do you want to achieve when you're developing a strategy? So for Housing Finance Bank, their focus was to target the mass market, and they are to do this through digital financial services. So remember, this is a mortgage finance bank. They are used to doing mortgage finances. They did not have savings products for the low income. So they had to design from the beginning. So we assisted them and supported them to do various things. We did market research with the target customers that they were trying to capture. We understood also the processes that Housing Finance had internally. We did a lot of revisions with them and supported them to do re-engineering. And then based from the findings from the market research, we supported them to develop a digital wallet. So what we are showing right now is what we did. We realized that the customers, the low-end customers, wanted a wallet which will capture their daily lives. For example, they will be able to do remote account opening through the app or USSD. They also wanted a savings product. And beyond the savings product, they wanted to be able to track their finances once they were getting this money. Then a very critical component was the ability to also collect money through crowdfunding through the account. Let me give the background as to why this was very important. So in Kenya, the society is such that when there is a particular event that's happening, a life cycle event, for example, there's a wedding or there's a funeral or maybe a baby has been born, what normally happens is that many people rely on the welfare and the communities to collect money in bulk so that they're able to support each other during these life cycle events. So we saw that this was a very a unique way of trying to ensure that we're able to provide this service to customers. So we supported HF Bank to design the app with the facility to enable the customers to collect money within their groups. And basically the customers will be able to transfer money through the app or USSD and collect money or raise money for a certain specific function. So that's just explaining what the crowdfunding facility in the app was to be used for. So another context again for the Kenyan market is that many people are involved in investment groups or in savings groups, whereby they save and they borrow for particular purposes. So we call them chamas in our local language, Swahili language. We also have the group saving for various purposes, let's say to buy land, to build an asset. So to make this product offering again very innovative and attractive, we gave or we supported HF Bank to also build this within their wallet as well. And then lastly, remember one key area for the Kenyan market, low-income users, is that people need to make their payments. They need that convenience when they're making their payments or when they're doing transfers between M-Pesa to their bank accounts. Because as a bank in Kenya or a financial service provider, you cannot really do without integrating M-Pesa into your wallet or into your platform. So this was a very critical area for many users. So if you look at the offering, the product that was designed at the end, it had all these facilities. So customers would be able to open an account remotely with limited KYC. They will also have an app with a tool, they will also have tools within the app where they were able to track and budget and manage their income. They will also have access to savings and loan products. And then they will also be able to raise money through groups for either investment or for welfare activities. And they will also be able to do payments or transfers between M-Pesa and also their bank account. So at the end of this, what was Housing Finance Bank able to achieve? So the results speak for themselves. From the period of, they were able to launch this at the beginning of 2018. And you can see from July 2018 up to March 2018, there was tremendous growth, both in terms of the accounts that they were able to open and also in terms of the loan value. So it just goes to show that when you design a product with your customers at the back end and you understand their needs very well, then over time you'll be able to see the results trickling in slowly. So in fact, the same year, Housing Finance were able to win also an award for being one of the most innovative, having the most innovative app in the market. So again, it goes back to having the customer at the back end in the mind. What is the value proposition for your customer? Once you're able to capture this properly, then the numbers will come. Rather than focusing on getting results, it's better to focus on the customer with the end in mind, and you're able to get the results at the end of the day. So we talked about, remember, let me just take you back. When you're talking about digital transformation, you're looking about the options that we have for transforming is we need to have digital products. We can also automate our processes. And then we also need to think about how do we digitize our delivery channels. So here we're going to be talking about how automation of processes or digitizing of processes. At the beginning of this session, I mentioned how important it is when you think about digitizing your processes. You first of all have to understand where are you as an organization. You need to assess your processes and see what are the redundancies, what are the issues first before you even automate. And then once you understand where you are, the next steps are now designing for the future. So I want to just share a case study of Sonata Finance, which is a large microfinance provider based in North India. They have a client base of around more than 600,000 clients. So they wanted to offer, they had issues around their turnaround time. They also had a lot of issues around the decision-making process, whereby they would make lending decisions which would be very costly, and they would get into very negative portfolios or the portfolio quality will suffer. So what they decided is to automate the lending approval process, because that's where the main issue was, by adopting statistical credit scoring tools. So I've seen a lot of comments coming in, and people are asking, how can you basically use alternative data in terms of making your lending decisions. So this is a case study showing on how we supported Sonata Finance. So when we observed their current processes and how they were doing it, we advised them based on how their current operations were. So we developed a credit scoring module which would help them to automate the lending decision for loans above $1,400 up to $2,800, while loans lower than $1,400 will be basically weighed using the judgmental credit scoring process. So what happened is they were able to reduce the errors that they were experiencing of getting in their decision-making process. They also were able to reduce the turnaround time. And because the process was also automated, they were able also to increase their client base and expand further access, especially to MSMEs. So one key maybe lesson here when you're thinking about also credit scoring and maybe you want to automate this part is, what kind of data do you have? And for us to support Sonata Finance, we looked at data points from the credit bureau and also from their internal MIS system. And we're able to develop a credit scoring tool or card that was able to assess the borrower and assess the probability of repayment. So it's a very simplified version of where we were able to automate this for them. But then we see, of course, progressively, there are so many models in the market which look beyond this data, the internal data, and also look beyond credit bureau data. So some of the fintechs, especially the fintech models, look at even data points such as, for example, social media usage. They look at, and they try to predict, they use algorithms to predict customer behavior. Some have succeeded in doing this, but others have not done very well. Let me give the context of, let's say, Kenya as an example. So if we look at the providers that have been very successful in maybe, let's say, developing digital products at the likes of Safaricom, where they were able to partner with a bank called NCBA to develop Mshwari, which is one of the largest digital credit products in the market at the moment. So what they do is that they look at the mobile money usage of the user. They also look at the savings, and they look at the repayment history of the borrower. And they also have other criteria that they look at, but the three areas I have mentioned are the key, the heavily weighted options when they are looking at the decision-making process. We have seen other fintech models in Kenya looking at social media data. They also look at, they use the algorithms to predict the behavior, but then this has not worked very well because we see some of the fintechs have had a lot of defaults. And so some of them have now have been relegated to relying upon the credit bureau data, or sometimes they even purchase data from Safaricom to make their lending decisions. So that's just showing you how different providers have done it, like, for example, in the Kenyan market. Then moving on to the next part is, remember we talked about how do we deliver these services to our customers. And when we talk about delivery of services, we're looking at channels. So these days we have a plethora of channels, and customers can now have access to their accounts in various ways. The traditional branches are still there, which provide the support. But then right now we see a lot of exploration around internet banking, using the smart ATMs, using the apps. Some banks are very sophisticated, those who have gone to the level of even having touch screen walls in their banking halls. And of course, there's the traditional, the use of credit centers as well, whereby the staff are supporting or giving advisory services to customers as they come in. But then I think what we see by and by when we look at the different contexts and different markets is that there is no single delivery channel that you can use to capture your customer. Customers right now want an omni-channel experience, whereby they can interact with your institution from a diverse way. So they can, if they need some advice, they can walk into your branch and get that advice. If they want maybe a quick transaction, they can use the app or the USSD. If, for example, they need to access the services which is nearby their home or their business area, then they can also relate to the agent that is there next to their business or to their home. So we advise that the institutions should focus on an omni-channel approach when they want to enhance delivery of services to their customers. So bearing this in mind, I would like to give the case study of Equity Bank and how they have done this very, very well. Equity Bank is one of the largest banks in Kenya. They have a presence in six countries in Eastern Africa. And they started in 1984 and they've been in the market for long. However, their story was not very good at the beginning. They were primarily serving, it was a building society where they used to serve the low-end customers. But then in those early years, they were really struggling to even break even. So the change came about when they decided to change their model of serving and they decided to focus on the low-end customers. So they changed their strategy, they changed how they were doing their business. And slowly over the years, they have been diversifying their service offerings, they have been changing their strategies. And one key area that they have been very good at is in terms of having a focus towards digital transformation. So their latest strategy, which is they call Equity 3.0, is basically focusing on becoming a digital bank for the future. So where they offer their customers services through their technology platforms to give them freedom, choice, and control when they're having access to their services. So Equity Bank decided to take an omni-channel approach in terms of delivery of services to their customers. And as an Equity Bank customer, you have access to their Equity app. You also have access to their EasyPay, which is an interoperable payment platform. You also have access to their Easy Loan and Easy Chama product as well. And they also have an internet portal whereby customers can also do their banking transfers. And the same suite of product also offers you a cash and liquidity management solution. So they have provided a plethora of services which are delivered through their diverse channels. So what was the impact in adopting this approach, whereby they were providing their customers with access to a wide variety of services and also delivering this through diverse channels, an omni-channel approach? So if we see the growth, it's quite tremendous. In just 4 years, we see from 2012 to 2016, we see a big change in terms of the way the channels are being utilized by their customers. So from 2012, we see the channels are at par with each other, but then towards the end of 2016, we see that customers have moved from being served at the branches or ATMs and even agents to actually self-initiated transactions whereby customers are serving themselves. So if you see, mobile-based transactions have really jumped up from 2012 to 2016. And we see that the branches and the ATMs are on a decline. Actually, Equity Bank has actually been closing some ATMs in some specific areas because they don't get any traction, they don't get any transactions there. If we also see the branches, what the bank is also doing is they're trying to transition their branches to become more of advisory centers, because traditionally Equity Bank has very many customers, so they didn't want to continue with that same momentum. So they have been encouraging their customers to visit the agents and also to do their self-initiated transactions through the app or the USSD channel. So what are the highlights again? I would like us to see that they were able to experience a lot of growth in terms of the deposits. Customer numbers also went very high, from 10.04 million to 11.13 million. Again, just emphasizing how having a very diverse suite of products was able to give a lot of growth to their loan portfolio, because you can see the loan portfolio went up to 6.3 million. And out of these loans, 5.4 million loans were actually disbursed through the mobile phone channel. And then as a result of using the omni-channel approach, they were able to reduce their cost-to-income ratio from 48.3% to 45.1%. So it's just to show you that if you get it right at the strategy point and you are very strategic about it and you walk the journey, you'll be able to realize the results. I'd just like to emphasize that for Equity Bank, they did not do this in a span of 1 year. It took quite a lot from the back end up to the point they were able to deploy this in the market. And you can see the results have been growing slowly over like a span of 4 years. So when we think about our journey, we should not be so focused on gaining the results immediately, but rather grow this process gradually. And one also key area that Equity Bank was very, very strong in doing was partnerships. They got into very strategic partnerships with experts in data security, technology, and this also helped them now to make sure they were able to lay the technology as a strong foundation. Remember I said you can automate your processes, you can have the best product in the market, but if you don't have a strong platform, a robust platform to support this, then it may not work out in the end. So at this point, I would like to bring in Anant. I would like to bring in Doreen to take us through a Q&A session before we proceed to the next session, which is going to be shared by Anant. Doreen?
Thank you, Olivia. That was an insightful session, quite a bit of questions that have come through. I will start with one that came from Abel to Anant. Abel says there's a great need for digital transformation. The new normal is gravitating towards everything digital. So this also presents risks with it. There is need to balance digitization and risk management in view of AML, CHF based on prevailing OCAMLA regulations. Is there any highlight that you can give on this, Anant?
No, so that's correct. That's a very important input that has come in. Risk management is probably one of the most important areas that we need to be aware of while going in for digital transformation. Specifically, asset liability management, as has been correctly pointed out, and also conforming to the various prudential norms laid down by the central banks of various nations. So it is absolutely correct that in the race of transforming digitally, one should not be myopic at all and should be very well aware of the regulations that need to be complied with. And that's why we had listed in the early part of the presentation that while deciding on a strategy, you should be aware of what the regulatory environment looks like and should take into consideration the rules and regulations that will have to be complied with. So yeah, AML and prudential norms and things like CRAR will have to be kept in mind while we plan for digital transformation. It should not be done blindly at all. Yeah, thank you.
Thank you so much. A question to you, Anant, again. Ananya says digital transformation is not only just adoption of technology, financial literacy of the rural areas, strategic choices, but the behavioral level change starting from the organization all the way to... Yes?
I'm sorry, I'm facing a connection problem. Maybe
yes.
you could just give me a moment, please.
Yes, please. Alert us when you're okay, Anant.
Can you hear me, Olivia?
Yes, we can hear you.
Yeah, please tell.
All right, so I'll read out the question to you again. Yeah. So Ananya says that digital transformation is not only just adoption of technology, financial literacy of the rural areas, strategic choices, but the behavioral level change starting from the organization to the customers. Is there any trend visible, like which kind of financial institutions are more likely to adopt digitization? What are the best ways to transform the organization culture and values? Are there any best practices? Over to you, Anant.
Yeah, so my response to that would be that every organization is unique and every organization has a unique culture. In fact, that primarily is what differentiates one organization from the other. So every organization has a culture, and it has been very correctly pointed out that the change that comes has a lot to do with people as it has to do with technology. So yes, there are a lot of behavioral challenges that will have to be managed. And the best way probably to do that, and how organizations have done that, is by involving people in a participatory decision-making process right from the word go. So once you've answered the question that, do you want to go for digital transformation? If the answer to that question is yes, and you have a business case for it, the next step while planning is to start involving as many stakeholders as you can, even customers if possible. So what essentially that does is that brings a very strong buy-in from those who will actually be impacted from that change the most, and it brings an explicit approval from their side that they are willing to change and would be ready to modify their behaviors accordingly. So successful organizations that have implemented digital transformation, be it the case of Shakti Foundation in Bangladesh, or be it the case of Sonata in India, or be it the case of M-Pesa in Kenya, all have done a lot of homework on managing the behavioral aspects, both inside as well as outside the organization. Because you have people everywhere, and everywhere the behavior has to be managed, and resistance can come from any side. So yeah, managing behavior is very important and is a very integral part of digital transformation. It's just not to do with equipments and internet and mobile phones and things like that. It has a lot to do with people. Thank you, Olivia.
Thank you so much. A question to you, Olivia. Bertrand is asking, what would you say were the key success factors for HF Bank? You just spoke about HF Bank as a case study.
Okay, thank you, Doreen, and thank you for that question. So if I think about the key success factors, I'll think about around maybe 4 main ones. So the first I'll talk about is the strong strategic commitment and buy-in from the board level and from the senior management level of HF Bank. From the beginning, this was very strong, and it came out very strongly for us because we were given very strong support, and we also saw that the senior management, especially the CEO, was really driving the digital strategy. So because they had strong board support and strong commitment at the senior management level, this was cascaded also to the operational levels. So there was also a lot of internal communication and a lot of sensitization of staff to prepare them for the upcoming changes. Remember, I mentioned that this was a bank that was primarily focused on serving corporate segments. So a lot of internal sensitization, communication, a lot of internal preparation had to be done to prepare the staff for the upcoming changes. Secondly, I'll talk about partnership. Remember, sometimes you cannot, if you want to take up a journey, you cannot do this alone. So HF Bank reached out and formed various partnerships, which were very instrumental in helping them in developing, let's say, for example, the credit scoring module. They also partnered with Safaricom also to support them around in the integration of the mobile wallet to their system. So they did this with the support of partners. So sometimes you cannot do everything alone. If you have partners who have already done something very well, then it's also good to leverage their advantages. So HF was able to do this very well. And when I talk about partnerships, again, one area I must mention is that someone has to be very careful, because sometimes some partnerships can end up harming the relationship, or maybe the partner might be stronger than you are. So you might not get the advantages that you might assume you will get. Then another key area that we saw was that they really were very good at, they focused on also testing their solutions. In fact, I remember we supported them for a period of around 3 to 6 months to pilot test their solution before they deployed it in the market. Let me give the example of also M-Shwari. One of the reasons why it also is very popular is that we understand that before they even piloted, they deployed this in the market, they were able to pilot for around at least 8 months. So keep on testing whatever you have designed. If it's a new solution you want to deploy to the market, go back, get the feedback from your customers, come back, retweak, and then that will also make sure you make any changes that you need to do. Then I think one of the fourth things I'll talk about is, which I think Anant also alluded to, which is like on people. First of all, the culture had to change, as I've mentioned. A lot of training and sensitization was done. So the people also had to be also trained to capture some of the digital skills that were needed going forward. So those are the 4 key areas I must say in general that were success factors for HF Bank.
Thank you very much, Olivia, for that. I'm sure you've answered the question comprehensively. So we have Nitish Naran with us here. He's a senior manager for banking and financial services and insurance in Asia. I'd like for him to take up a question. Chris is asking, back to strategic rationale, what metrics do you have to show the improvement to efficiency versus growth in revenue or profits due to digital transformations? Are there any numbers to show which is a greater objective to be achieved by evidence or case studies? Over to you, Nitish.
Yeah, thank you, Doreen, and thanks, Chris, for asking this question. And it's an important discussion to have, which is digital transformation for what? And many a times we've seen that senior management teams seem to do not have a very clear answer to this question. As part of our own digital transformation readiness assessment, where we look at internal and external factors, we actually engage into discussions with the senior management teams to articulate, what exactly do they want to achieve through digital transformation. And we try to look at their organizational strategy. We speak to the board, we speak to the senior executive team, we look at the technology infrastructure which they have, which we also try to speak the middle management and the frontline people to understand how do they see technology and what technology can do to their daily routine, and then what is the extent of digitization that they already have. Now, why these questions are important is because what digital transformation may mean for one institution could be quite different for what it may mean for the other institution. Now, the case study that I just shared on the group, which is the Bangladesh case study from Shakti Foundation for Disadvantaged Women, the senior management team had one objective, which is to raise the voluntary savings from their customers. And they thought that one of the ways to do it is using technology, particularly digital channels, so that customers can easily deposit cash as and when they want to. So when we started these interventions, the objective was very clear, which is to raise deposits. And the case study that I've shared clearly articulates how the number of accounts have increased after the intervention, how the number of customers have increased, and how the value of deposits in those accounts have increased. So while we may not be talking exactly about efficiency per se, but because we had a specific metric in place, which is growth in overall value of deposits and number of customers who have savings account with Shakti Foundation, we could clearly see that each intervention had a direct impact on the metrics defined well before the implementation. I'll stop here, Doreen.
Thank you so much. Thank you so much for that. And thank you everyone for the conversations that are going on in the group. In the chat box, these are very insightful as well. So maybe just one more question for Olivia before we move on. Deadput and Stephen were asking, was the Sonata Finance credit score for group loans or individual loans? Also, was it for scoring for business, MSME, or for individual, or a blend?
Okay, thank you, Doreen, for that question. The statistical credit scoring module was for individuals, but I can also bring in Nitish to shed in more light about this case study as well. Nitish?
Nitish, maybe you can help a bit on this case study, shed more light.
Yeah, sorry. Thank you. Thanks, Doreen. Yes. So yes, this credit scoring tool was developed for MSME loans, and this was an important time when this tool was developed because Sonata was primarily offering joint liability group loans, and they were thinking of expanding their product suite and include a micro and small enterprise lending loan. The ticket size which they had in mind was between 100,000 to 200,000 Indian rupees. They clearly had the capacity to do group loans, which at that time was somewhere between 30,000 rupees to 50,000 rupees, but they did not have the capacity to do higher ticket size loans, both at the middle management level as well as the field staff level. Now, what we did was we started with the sample of the group loan customers, and we developed a tool which could work out as a proxy for the bigger loans, which is the MSME loans. There was a couple of questions here, and I've shared a video which charts some of the experiences that we had while developing this tool. But the first and foremost challenge was that with any institution, if you're planning to develop a statistical credit scoring tool, the quality of the data is extremely important. And we realized that while the MFI was capturing a lot of data, most of it was not fit to be used for credit scoring. So there were issues around how the data was captured. There were issues where the understanding of the particular indicator by the person who's capturing it was clear, or was there some element of differences. So these challenges had to be navigated through. But the idea was that if this tool is ready, it can be integrated to the existing system of the MFI, and then they can use it to aid decision making. The other idea was that these tools need to evolve over a period of time. So you pilot it, then you review it after 3 months, after 6 months, check how robust those tools are, and then further strengthen those tools. And that's where we thought that we start with what we have, and then as we get more and more data, we further strengthen the tool which we design.
Thank you so much, Nitish, for that. I'll just take one comment. Chandrasekhar, you said that for fostering innovation, build innovation cells, participate in incubation cells of premier BIB schools, and in a spirit of industry academy interaction and exchange. Thank you for that comment. So we will move on to the next session. I'm going to hand this over now to Olivia to take us through the next session. Thank you. Keep dropping the questions on the chat box and we'll answer them at the very end of the last session. Thank you very much.
Thank you, Doreen. Thanks. So I'll just, now we're talking about the strategic options for digital transformation. So now we are going to get into how do we actually implement this going forward. So I would like to bring in Anant, who will take us through this session. Thank you, Anant.
Yes, thanks, Olivia. We have already been discussing a lot about how to go about implementing digital transformation through the case studies. And it is really a great pleasure to see that the participants have been sharing such insightful things about the challenges faced and their ideas about how to go about it. So in this session, probably I will just try to give it a little bit more structure so that we can have a clearer view of maybe how to go about it. So there will be just a twin agenda to this whole session. One would be to understand the strategic elements while implementing digital transformation and what can be the key challenges. Although we have been deliberating on quite a few of these challenges, but then let's just systematically understand a few more of them. So as we start on the journey of digital transformation, and we have the question of why do we want to do it, and we have a yes to that, and we also have a yes to whether there is a business case to it, and we want to implement, we will have to understand that it is all about change management. And we have been talking about the resistance that might come from inside the organization, from various stakeholders. Then what if a regulatory regime changes and we have a new law in place? So we have to understand that digital transformation is a journey and change management is a very integral part of that. So in order to manage that change in a systematic fashion and reach the maybe 2-year, 3-year, 5-year goal that we have set, we will have to follow a certain path. And this is what the path should look like. We should have a very good assessment of where we stand today. And that is when we start preparing for the future. As we do that, we plan all the major milestones and we also plan how we are going to reach there. That is when we start implementing it, maybe do some small pilots, then scale up. And once that is in place, we will be agile enough to tweak things around so that we are able to sustain the benefits that were once achieved out of doing this transformation exercise. So as Nitish was also just mentioning about the Sonata tool that was developed, everything needs to be revised, everything needs to be updated, because we live in such a dynamic world today that, and especially in terms of the digital experiences of people, that organizations will always have to be on their toes to sustain the digital transformation that they had once begun. So essentially what we are saying is that you begin the journey and then probably you always remain on that journey in some sense or the other. So change is going to be very important. We'll have to plan how to manage that. If we want to exemplify, we could just use this small process automation case that we can probably have a look at to exemplify this journey. So once you have a business case with you, you set the business goals for it, and then you back it up with numbers as to whether we would be able to justify the costs with the benefits. If that's a positive business case, if the answer to that is yes, if it is no, then you continue with the present system. If you have a yes, and this is important, ladies and gentlemen, if you have a positive business case and you have a buy-in from all stakeholders, if you do not have a buy-in, then you again continue with the present system. So as I was mentioning earlier, a very strong buy-in is very important, and the decision-making process has to be very participatory. So if you do not have a buy-in from the stakeholders, we still do not go ahead with the exercise. So we are not saying here that you shun it altogether, that you just let it go. We probably wait for a more conducive environment. We probably wait for a better time to again initiate the whole thing. But then at that moment, if we realize that the buy-in is not there, then probably we do not go ahead at that point in time, is what we're saying here. But if we have a buy-in for all the stakeholders, then that is where we have the green signal, and that is when we can go ahead with the implementation plan. So that should be a black box kind of approach that should be taken. And if it is not taken, then something like this can happen. So essentially the story is that M-Pesa, we all know, had created a huge competition across all mobile network operators in the African market. So what happened was that MNOs felt that they somehow had to rush to offer similar services to their customers, or they were going to lose all of them. So what happened was they without applying a lot of planning, without applying a lot of background research, without doing their homework, all the functionalities that were needed, products were launched, and we had about 200 mobile service operators offering digital financial services within no time of M-Pesa going live. What this resulted was that only about 5% of them came out successful, and around 190 of the 200 service providers who came into this market had to shut down. What the lessons that this has for us is that although it will require a lot of effort initially, although it will require a very deep engagement with multiple stakeholders and a lot of pushbacks also from a lot of agencies, a lot of stakeholders, a lot of people, it is important that we undergo that journey before we go for any digital transformation, because the fruits will come only when all the pieces will fall into the right place. So it's very important that we take care of the various elements of planning that we have to put in place before taking this journey. So the case of M-Pesa and the bloodbath, so to say, that it caused in the African market is an important lesson for all of us to understand that while digital transformation is a great thing, it can give us miraculous results. It is equally important to be mindful of all the things that have to be taken care of, especially involving all the stakeholders and taking a very good view of whether this is the right time to go live. Next, let me just try to put your fingers at work again, and let's try to do this quick poll around what can be some of the challenges in implementing digital transformation. Although we've been discussing quite a few of these, but then let's just hear across from you one more time. So yeah, there you go. I'll give you maybe around 30-40 seconds for this. Yeah, maybe just 5 more seconds. Yeah. So these are the results that seem to be coming out. And while implementing, the biggest thing is that, which most of us seem to be saying, is that we'll have to manage the digital risks that arise out of transformation. That's very correct, actually. And the second is that we need to be relevant to the customers. Again, a very, very, very important point. Of course, justifying the cost and facing internal resistance are also important. That's why we probably see that most of the responses, all the responses have received good response with an average rating of more than 15% for all of them. So yes, that's all of you are correct. And managing the digital risk specifically in terms of frauds and in terms of data inconsistency and in terms of data privacy issues is a very prominent challenge that digital transformation will have to deal with in order to be successful. That's correct. If we could just have a look at some of these things, which we have all identified collectively. Staying connected and relevant to the customers is very important. Probably one of the ways in which we can do this is by adopting an appropriate transformation strategy in which we take care that at all times we are ready to hear across from customers, and we have a ground team which is there to take feedback from them, if not on the ground, then at least remotely. The second would be how to be monetizing the digital business. So for that, the mitigation measure can be, we first find use cases and value propositions, and then we go about the monetizing process. That's why we need to have a roadmap of say 1 to 2 to 3 to 5 years. The third would be to, digital risks that we have all identified also. So we'll have to continuously invest in risk mitigation. The fourth would be to, just justifying the costs involved, as again came out from the poll. And the way to ensure that the costs are justified and we are reaping benefits is to ensure that the project governance is very structured. That is why we have again and again been talking about having a strategy and a plan in place before we even start walking this path of digital transformation. Internal resistance is obviously going to be handled by taking a buy-in from the internal stakeholders, because change management, we've been talking about change management all throughout this presentation. It's a very important thing. It's all about people, and digital transformation, although might come through certain devices, through certain technology, by investing in some software, hardware, applications. But then let's not forget that it is going to be used by human beings. And it's very important that we have a very strong buy-in from the ones who are going to use it, so that when it hits the ground, when we go live, then people are actually happy using it, and we are able to reap its benefits. So this essentially would be the end of the session. And we hope that I and Olivia, along with Nitish and Anu pitching in, were able to give you some broad overview, some bird's eye view of what digital transformation entails, what digital financial services are, first of all, what the ecosystem is looking like right now, how the COVID-19 pandemic is necessitating this digital transformation journey for organizations. If they want to take it, what are the vital questions that they must ask themselves and have conclusive answers for? If they want to go ahead, what are the various measures that they should have in place, and how are they supposed to go about managing the risks and the threats that just might intervene there taking this path. So we still have time on our side. So I would just request Doreen, if we have any important inputs that are coming in from the participants or would want to discuss any of their queries at this point.
Thank you, Anant and Olivia. Yes, there are a few questions that have come in from that session. There is one that Deadput has asked: in your experience, is a financial analysis upfront realistic? I've often seen the cost being drastically different from the initial planning to implementation. Now, Nitish tried to answer this on the chat box, but I think I want to invite him to just comment a little bit so that everyone can get the benefit of the answer, the ones who did not read on the chat box. Nitish?
Yeah. Thanks, Doreen, and thanks for asking this question, Devdut. It's important because there are a lot of moving pieces, when we're talking about digital transformation. So there are different partners involved, there are different technologies involved, and then there are different cost elements associated with each of these. So there will always be, some level of variability, at the time when you start and by the time you actually end up implementing. The other challenge is that sometimes it's very difficult to visualize what all resources that you may need. And when I say resources, it means both software, hardware requirements. Sometimes these requirements evolve over a period of time. And thirdly, the human resource that needs to be employed for this. And the existing human resource whose capacity needs to be built so that they can benefit from the digital interventions that are being introduced. So you're absolutely right that there will be some variability, but doing it upfront is critical so that the management has a clear view as to how much they are investing and what will be the likely return on their investment going forward.
Thank you so much for that. There's one question for you, Anant. A question was posed asking, first you started talking about the system integration. So question is, how much does the system integration cost? How long does it normally take to implement?
Okay, so there unfortunately cannot be a customized answer to how much costs will be involved in integration, because it will vary with the size of the organization. But what I can say certainly is that with the kind of integration tools available in the market right now, it is not going to take a lot of time once the agreement and the commitment from the organization is there. So the time required will not be very long, but the costs will depend on the size of the organization. Like, is it a 30 branch organization or a 300 branch organization? So that is where the cost component will come, because the amount of storage that you would require and the kind of backend systems and the kind of disaster recovery systems that will have to be put in place will depend on the size of the organization. But the time requirement with the kind of cutting edge technologies available today, the time required will definitely not be too long.
Thank you, Anant. As we mentioned, we have some bit of time in our hands, and what we would like to do is to hear from you in terms of what has been your experience. What has been your experience when you're implementing digital transformation? So I'll give a chance to anyone who'd like to make a comment at this point. Just kindly go ahead and then speak, and then we can have the conversation. Is there anyone who'd like to make a comment at this point?
Yeah, hi, this is Chandrasekhar.
Thank you very much. Go ahead.
Briefly, a lot of transformation has been discussed, and some very good ideas have been put forth in the PPTs and in the chat rooms. People have been asking how and why and all that. So I would like to just add my perspective. So basically, it depends on how much will it cost, etc., is what is being asked. So I'm saying it will depend on, are you planning on total digital transformation or partial? Do you want to reinvent the wheel in your own company, or do you want to partner with others who have built platforms on which you can host your apps? And then, so that would perhaps subsidize the cost of your technology transformation, and that is part of the digital transformation. And people transformation would mean that you need to hire employees who are curious, who are young, who are not afraid to take risks. The company needs to indemnify from the outcome of that risk. And a lot of partnerships and collaborations with industry associations, academic institutions would also help. And then, of course, finally, everything depends on the customer experience. So I would say, how much does it cost was the last question that was asked. And I think everything will depend on whether you're looking at total or partial, or modular transformation. Modular is you can change a module, work on it, come back, buy or partner for another module, fit it into your scheme of things, and then keep on building the modules. So it depends on what your choice of transformation is. Thank you.
Thank you so much for those comments. Anyone else who would like to pitch in and say something? So thank you very much for participating and finding time to join our session today. I'm sure all of you can agree that it has been a very insightful session with a lot of comments, a lot of learnings, even from each other. And we have really enjoyed having you as our participants. So what we'll do, there's been a lot of questions in the chat group asking whether we'll circulate the training. Yes, we will. It is recorded, and we will send it to you on your emails so that you shall have for future reference. I'd like to give a very big thank you to our facilitators, Olivia, Anant, and Anant, and also to you, our participants, for joining us. I'd also mentioned when we started that this training is a very condensed version of the full course, as the course obviously covers a bigger scope of work. So if you have if you have questions about this course, you'd like to register for the same, kindly get in touch with us, or any other course that is offered by our institute, Helix Institute of Digital Finance, which is a training arm for MSc. So, and with that, without any further ado, I would like to bring this session to a close. And once again, thank you very much for joining us today, and we look forward to learning with you in the future. Thank you.